Another thing which the Reserve Bank is responsible for is banking supervision. So the granting of licenses. If an entrepreneur or someone who's entrepreneurial says that I want to start a bank, they're going to have to speak to you first, right? And
Yes.
and then you take them through certain requirements, or you put them through their paces. What are those paces that you put them through? And yeah, can you just explain a little bit before we get to the depth of
All right.
the actual requirements? Yeah.
So within the central bank, there is a creature of the law, which is referred to as the Prudential Authority.
Hmm.
And the Prudential Authority is a prudential regulator of the South African financial sector. And within that is the responsibility to regulate and supervise the banking sector. And the primary legal instrument that we have to supervise and to regulate the banking sector is the Banks Act. And it is that act, which is obviously an act of parliament, which outlines both quantitative and qualitative prudential requirements, which are a minimum of a set of requirements that an entity has to meet before it can take deposits from the public, which is what the business of banking entails. And one such requirement is a minimum capital requirement of 250 million rand, which must be unencumbered and be available at risk to base depositors. And then, of course, there's a set of other requirements which are qualitative in nature around the knowledge and expertise of the directors of such a banking organization before it is licensed, and further requirements on systems that you must have and invest in to be able to manage successfully a banking enterprise and be able to take deposits from the public. And I think at the center of all of this, which is, I think is very important for the conversation, is that these are for a public policy imperative of depositor protection.
Yeah, correct.
What does that mean? Depositors must have the confidence in the banking system because of the credibility of the regulator and the application of the relevant regulations, that their money will be safe. So if you place 100 Rand with Unati Kamlana Banking Corporation, that you will find it with interest when you return.
Yeah, no, that makes sense. And I think you highlighted a very important point, and that's depositor protection. Because when I have conversations with other people about the requirements, particularly the 250 million, because that seems like it's the hump. It's not necessarily, or you can correct me if I'm wrong, it's not necessarily there to create a barrier to entry, so to say. But it's there to protect depositors, that if something bad should happen to the bank which you have started, there is unencumbered capital, meaning capital with no strings attached, that the depositors can get their deposit back. Am I right? Am I wrong?
So I think it definitely is a barrier to entry, but there's a reason why in this sector of the economy, you require to have some kind of barriers to entry. There is no banking sector in the world worth salt that does not have barriers to entry in banking. Why? Because something can go wrong in banking, and we have enough literature and experience to know how expensive banking crisis and bank failures are in general. And what we cannot afford is for the public to know that their deposits are safe in the banking system. Because what will happen? Then they will not place their deposits with the banking system. And of course, there's got other implications which are negative for, in general, the economy, its development, and the ability of borrowers to raise capital within an economy. So it is a barrier to entry. And I think we can have a debate about whether it is pitched at the right level. I think you can reduce it to 100 or to 50. There will always be people who will say, well, I don't have this amount of money, and therefore this barrier to entry does not make sense. The point is that there's got, like you say, to be a level of capital at risk from someone who wants the ability to raise capital from others through deposits. So that if something goes wrong, those from whom they have raised deposits are able to be protected for their interests, because they are not placing deposits for you to run a business. They are placing deposits in trust. The business of banking is a business of trust. So people have to trust that their money is safe. And that is why you require these kinds of barriers to entry.